First, a recap of last week. The S&P 500 crossed 7,500 for the first time ever. The US and Chinese president met in Beijing, easing trade tensions and announcing new agricultural deals. And on the corporate side, Cerebro System had the biggest IPO of 2026. We also saw strong earnings from Cisco and Applied Materials. These three companies are all part of AI infrastructure. Cerebras builds the ships. Cisco connects the data centers. So you have here the networks. And Applied Materials makes the machines used to manufacture the famous semiconductors. And then Friday happened. A sharp global bond sell-off hit markets. The 10-year Treasury yield closed near 4.6%, its highest level in over a year. The 30-year Treasury yield reached its highest level since 2007, which brings us to today. Crude oil is trading around $107 a barrel, and the conflict with Iran has entered its 80th day with no resolution in sight. That matters. Why? Because higher oil prices can keep inflation elevated. And if inflation stays sticky, the Fed has less room to cut rates. Speaking about the Fed, aka the Federal Reserve, we have now a major leadership transition. So Jerome Powell's term as a chair ended last Thursday. And Kevin Warsh was confirmed last week by the Senate on May 13th and is expected to be sworn in this Friday at the White House. So markets are watching not just oil and inflation, but also what a new Fed chair could mean for monetary policy, interest rates, and the labor market. Let's remember that the Fed's mandate is to balance price stability with maximum employment. This week, the key event is Nvidia's earnings on Wednesday. Given the stock's valuation and its role as the market's main AI proxy, simply beating expectations may not be enough. Investors will want more than a beat, strong forward guidance, and evidence that hyperscalers' AI spending is still holding up. The bar is high. Then on Thursday, Walmart reports giving investors a fresh read on the US consumer. That's today's market story.